Welcome to another Founder Wisdom Pod with Pankaj Karna. He is founder and managing director at Maple Capital Advisor. We're going to talk about banking, entrepreneurship, investing, M&A, private equity, and everything in between today. This podcast is brought to you by podbuyer.com. If you want to start scale, be invited to a podcast like this one, you can go to podbuyer.com or Google Charles Cormier. Pankaj, welcome to the pod. Tell me a bit more about yourself and about MCA.
Thank you, Charles. Where do I start? So I basically am born, brought up in India. I did my education in a boarding school called Mayo College and went on to do engineering in a place in South India called Manipal Institute of Technology, the same institute as which some very well-known guys have gone, like Satya Nadella and others. I then went to do my post-graduation in McGill, where I graduated in finance and international business. Started my career in banking at BNP Paribas, Mumbai, Delhi, and went on to work very closely on the investment banking, corporate finance side at Rabobank. Set up BNP Grant Thornton's investment banking. And when I turned 40 in 2010 is when I started my journey for own entrepreneurship. A couple of those stints were semi-entrepreneurship in the sense some of those businesses I started, but I was obviously not the entrepreneur there. Could be a professional or semi-entrepreneur, as you may call it. So I had a couple of those stints, and then I really jumped on to when I turned 40 to set up Maple. We started. It's a business which does not have. I mean, people are the raw material. It's not a business which requires factories or anything, and it basically depends on your work you've done in the past and the relationships you've had. And we were focused on a number of sectors, namely consumer, manufacturing, financial services. And we believed what we had done in the last 15, 20 years would come in a good hand as we launched on our own. Business started very bootstrapped. We started with an initial capital of $2,000. And ever since, we haven't put in an extra rupee from our side into the business. We start our first business, first M&A transaction that we did was a listed company, despite being a three-man shop and a boutique. This was a $20-odd million listed company acquisition that we did to give us a lot of confidence. And then there was no looking back. Today, we are 14 years into it. We have done over 40 transactions, invested in half a dozen companies, and it's a very good feeling to be here today talking to you and sharing my experience for whatever it's worth. Thank you.
Okay, so my pleasure, by the way. And these clients of yours, how do you usually get in touch with them? How do you find these potential transactions that you assist in? Do you do outreach? Is it referrals? Is it your reputation? How do you go at finding new clients?
Well, I think over my career now, I've done about 125 transactions. And, in our business, a transaction is a quite an intimate, engaging affair over 6 to 12 months. So you get to know clients, and they get to know you very closely. And the number one source of referral, especially in the private markets, in the space that we are active in, $5 to $50 million, is largely word of mouth and reference. Those are the primary means of. Apart from that, obviously, new age companies is a different theme which started in post 2015, where the reach outs have to be more modern, the kind that your expertise is essentially more through social media or through LinkedIn or doing or at least communicating, because a lot of these entrepreneurs don't have history. They're very fresh. They don't have the networks, and they have very close networks that they depend on. So they depend also a lot on what's going on in the ether, and they make their judgments. So LinkedIn is an important referral point for us as far as new age companies is concerned. But a lot of it is still reference word of mouth kind of, people get to us that way. And uh, and many a times we are impacting lives. Entrepreneurs have set up the business for 30 years. They want to sell their business. It's very critical uh, decision, critical action point at that point of what they're seeking out. If they have a partner who's delivered what they wanted, it creates a great reference point, and they actually talk about it everywhere in their network. So it kind of moves from that way. But yeah, it's as I said, word of mouth, references, and then new age companies, channels like LinkedIn help. Yeah.
And then what kind of startups do you usually target? Are there specific niches? Do they need to be at some certain stage? And how do you help them go through the transaction?
So there are two parts of our business. One is our investment banking business, where we typically look at mid-sized companies where either the transaction size or the capital requirement is between $5 and $50 million. That's a very clear focus for us. Uh, that means companies who would have already proven their proof of concept. They are on path for growth. So that's typically growth capital in, or it is they have reached a stage that they have created some strategic value and they can be actually, uh, you know, have potential interest. Where we invest ourselves, we are very different. We are actually write the first check, and it's a high risk game. We obviously then take somewhat interesting level of stakes, and we get actively involved in some of those businesses. That's but those are not large capital. It's proprietary capital. Typically goes up to 200, $250,000. But that's small investing, but high risk. So that's two sides of our business. Yeah.
Well, and the niches, are there
Yeah.
specific niches like
Yeah.
finance, fintech, or SaaS?
Yes. We focus significantly. We are known in the market, especially in India, to do new age businesses. Of late, in the last 5 years, we have demonstrated very good traction and performance in new age businesses. New age
And what is
businesses,
new age?
I would categorize as businesses. Say 10 years back, those businesses were not there. Okay, they're new age. They could be technology or technology aided businesses. But to give you an example, we worked very closely in the co-working market. 10 years ago, there was hardly any co-working market in India. Co-working, I would call, is a new age business. We raised $80 million there, which is now one of the leading companies in India going for IPO potentially in the next 12 months. So we have ridden the journey from concept to actually helping them in multiple rounds of. Uh, so that is new age business. New age businesses are there in fintech, for instance. There are a lot of digital fintech businesses. They would call them new age businesses. There are new age businesses which we have done in agri, for instance, new ways of doing things in agritech we call it. We would also categorize new age as we did something in the fitness space. Fitness, in a very organized fashion, has become new age, and in the sense of the traditional fashion, it's somewhat different now. There is social aspects to fitness, there is tech aspects to fitness, all of that. So those are the spaces. I mean, otherwise, traditional sectors, consumer is strong for us, financial services is strong for us, and we do selectively. We even in manufacturing, we do a fair amount of work. We've stayed away from infrastructure and large projects, but those are typically balance sheet heavy, and big banks have a better role for that.
The transactions you assist these new age businesses in, what do they range from in terms of cash? And are these only Indian startups or is it worldwide?
So our focus is India. We are India specialists. Uh, Having said that, capital for these businesses comes from across the globe. So there are, for instance, in one of the businesses we were advising was a business owned by Oak Tree Capital in London, and we sold it to a Indian, what do you call it? You could call it a startup, but is now one of the largest fitness companies in India, backed by a number of international funds. So that's the lay of the land. Most cases, it's international funds, or it could be potential acquirers, but ours, most of the capital is through funds both in India and international. Most of the businesses that we target are India-based businesses, unless it's a cross-border acquisition, which is on behalf of our clients here. So that's the kind of lay of the land. I think we have our hands full given the situation in India, which is fairly robust compared to the rest of the world today. Uh, and and it's a very busy time actually. Uh, and we have spent last 14 years specializing in this market, so we think it's a good time for us here right now.
And the transactions, are we talking about average transaction of 5-10 million?
$5 to $50 million. So most of our transactions you will see are between 15 and 40. So 5 to 50 is the range that we target on. But yeah, but in some cases we have gone larger through multiple rounds of investments. But yeah, 5 to 50 is really our sweet spot.
Okay. So on average, let's call it like, yeah, 15 million or something like that. And as an M&A firm, do you take a percentage of that? Is it a flat fee? You charge 100K plus per deal? How does that go?
Yeah, it is a percentage and it depends on stage of the business, transaction type of business. So it is a percentage. There is some retainer elements. It's a combination of those two. Yeah. It's pretty much like international markets, newer age or somewhat younger businesses. The percentages are different. Mature businesses is different, but yeah, pretty much in line with international markets.
Okay, so you did 40 transactions in your career, and let's say that you reap at least $1 million per transaction.
In my company, not in my career. Career has been a bit longer than that, but yeah, in my company, so our fees range from 200,000 to $1 million. That's the range.
Interesting. And then you also invest in some of these companies. What will be the determiner of if you will assist that company, invest into them?
So investment
what are
is very
criteria?
different. Those are early stage ideas or very compelling ideas. Sometimes we also have options to invest in companies that we advise, but mostly our investments have been in very early stage businesses which are creating categories in the market, businesses which have large end markets, businesses which have got very good set of founders and entrepreneurs, uh, ideally with some traction, very good clarity of thought, uh, uh, entrepreneurs which are uh, trying to uh, address problems, uh, opening up great end market for possibilities. Uh, Typically, will have some element of tech in it, so that there is efficiencies and there is unlock with scale in terms of uh, in terms of operating efficiency. And so that is essentially what we think goes for us. Typically, we avoid extreme direct marketing-led D2C businesses, which burn a lot of cash. We focus a lot on unit economics. Fundamentally, the unit economics has to work. We don't want to burn 1 rupee to get 1 rupee revenue. Those are the kind of businesses we won't back. We want to back capital efficient businesses which can stand on their feet if there is no capital coming in after we go. But if capital comes in, they could be very large businesses.
And okay, so companies that can survive on their own, but wouldn't these be bootstrapped by nature? Aren't these companies constantly seeking new capitals? What type of business can survive without the injection of oxygen into them?
Yeah, I mean, capital is important and they need to continuously take capital. But uh, if you don't make money at the unit level, then it doesn't make sense to do a business in our view. Uh, it is not gaining revenue at any cost. Uh, we understand with scale, there may be initial burn, but with scale, it'll make money. That's what we need to get traction, confidence on. I think that's important. In every company we got in, we got multiple subsequent investors that have come in. So that is proof of our investment philosophy. Um, and it's evolving. I won't say we are 30 years into this game. This has been recent for us. We already have one exit, second is underway, and the third one is scaling up for an additional round. So things are going in the right way.
What would be your top objectives for next year in 2024?
2024 is a very interesting year globally. I think it's a year with elections around the globe. It's a year which has got geopolitics at its peak. It's an year where interest rates are have pretty much peaked around the globe. Interestingly, the differential rates between India and rest of the global markets is not as much as what it used to be 5 years ago. India, we think, is at a very sweet spot uh, of unlocking explosive growth, and we believe there will be a lot of funds are sitting on a lot of gunpowder to invest. So I think it'll be very interesting year 24. Obviously, there'll be a little bit of wait and watch for election results. We have elections in India as well. So like in US and other markets, there'll be wait and watch to see where that direction goes. But I think it's going to be driven by that. So we'll see probably more activity in the second half than in the first. More capital market activity in first half. Second half, we'll see maybe more private investors probably wait that out. Uh, but yeah, uh, it's going to be an interesting year. It's going to be a volatile year. Uh, but yes, I think there is enough capital there, and uh, and we continue to see the momentum of 23 into 24.
And how can you compare the current financial or economic times with the ones in 2008?
2008. Okay. So 2008 obviously was a systemic issue because of credit event in the US, and uh, I think what has happened right now is the effects of interest rate, which have impacted uh, treasury actions. The fundamental on-ground actions have not played out as yet, which means the borrower on the street to companies who have borrowed monies uh, uh, haven't the increase in interest rates and the effects of it haven't played out as yet. And I think 24 is going to be quite a tentative year in the global context that way. You got to probably see a few credit events because of higher interest rate now being there for almost 18, 24 months. And that's a time by which I think most companies who had buffers would have played out. And so I think it's going to be very interesting to watch. I think we're going to watch fundamental growth and recessionary trends also play out, whichever way they go. I can't predict, but uh, there is a lot of murmur that there could be slowdown or a mild recession at least. Uh, so credit events, we have to see how they play out. I think they will play out, and we have to be ready for those shocks. Uh, Growth and recessionary trends, we'll have to watch. I think there are signs of it in Europe already, but I think US also has some indicators. Uh, and we have to see how the geopolitics stands out and plays out, and the election results. So there is a lot in store in 2024. Uh, uh, and it could take things both ways. And I won't say it will go only one way. Some of those things could be positive, but it could go both ways. So it's one of those years when sharp speculators could make a lot of money or burn a lot of money. It's that kind of a year.
Your full process in the business, how could you scale M&A consultancy? Do you feel it's something that does scale? You did 40 transactions in your career. Could you do 40 a year, for example?
Yeah, so that's the next phase of Maple that what we are focusing on. I used to be very hands-on involved till about 18 months ago. What we have done is we have instituted independent deal teams now, and the only way to go is to empower and for me to be, you know, less and less involved in transactions, but only vetting quality. That's really where I focus on most of my time. Uh, so we have to empower people and get the right people. I think the story is about building teams and scaling up from there, and that's how we can grow in this business. We have multiple teams working now, and we can see the results. And I think to get to 40 transactions a year, we'll need a large team for sure. It's not going to be incremental growth. So I don't think we are aiming for 40 transactions a year, but certainly we could aim for 10 or 15 and build teams around that, maybe, so to kind of support that.
And couldn't AIs do that and help systematize the whole thing?
Sorry?
Could AIs, agents, bots
Oh, right.
help with that?
So AI can help in a lot of things. In our business, uh, there is going to be intelligence coming in uh, matching invest funds with potential deals, M&A targets. A lot of those works can happen with AI, but it's still a very people intensive business, and a lot of situations are very driven by a lot of emotions and a lot of factors, which typically, involving AI might be dangerous. So I think yes, in big parts of the business can get accelerated with use of AI, especially matching the right kind of funds or uh, transactions, especially for M&A. Yes, that is something we are already using, and I think we have to see and use tools which are more kind of structured around our business.
Where can people find out more about you, Pankaj?
I think the best route that we have seen is a LinkedIn, uh, my LinkedIn page and profile. We have our website, which is maple-advisors.com. Those two channels are probably the best way to get to me, other than my email address, if that helps.
It was Pankaj Karna and Charles Cormier for another founderwisdompodcast.com.